Okay. Yeah, well, there you go. That's not the date today, is it? I haven't changed the date on the slide. That's tedious. I'll just scrub that out. It's Thursday, the 14th of June, and it is the ECB day. We're still responding to, or markets are still reacting to the Fed last night. Really interesting move on bond markets, actually. And they have sort of hit the dollar, and that is sort of reverberating across markets. Now, let me get into this quickly. So let me see. That is the chart I want to show you there. Dollar has fallen away. Really sharp intraday fall back from the highs, actually. Initially, the dollar gained on the back of the Fed, increasing interest rates, and a range of hawkish tilts, actually. Hawkish tweak to the statement, hawkish tweak to the dot plots, hawkish tweaks to the inflation, unemployment and growth forecasts. However, it was only one. I mean, the bond market's actually pulled higher initially, above 3% on the 10-year, and then dropped back, and we're now at 2.95. And sort of looking at it, it was only one member actually that tilted the balance in towards the market. Or the Fed sort of projecting for 4 rate hikes this year. So that's a pretty much in the balance scenario, I still think, and that could easily change. So I think perhaps that was why that the bond markets initially sort of reacted higher, but then fell away again. So what we have still got though is this tightening of the spreads, which on the 2s 10s, which is the yellow line, and the 5s 30s, which is the pink line. And that reflects the flattening of the yield curve, which is sort of increasingly sort of likely to happen. And it'd be interesting to see how the market continues to react to that, because at the moment, certainly, this the dollar is weaker on the back of, I think, as I said, the dot plots that were hawkish, yes, but only marginally, and maybe they could have been more hawkish. And subsequently, the dollar has suffered on the back of that. But let me show you the impact across markets, because we've seen euro dollar back higher. Now it's testing the 1820 level of resistance. I'll talk about that in a bit. Cable has rallied strongly today because sterling had a big jump on the back of retail sales. Dollar yen is back lower. Back below 110 figure. Gold is above 1300. Now that's interesting. I'll talk about that because of a closing sort of move above 1300 starts to sort of turn the sentiment more positive on gold. But just a whole range of issues that have impacted through the markets, and the ECB is, yeah. I'll just looking at Gordon's comment there, consolidation on DAX and Dow. Any ideas for trading? I'll talk about that. I'll certainly talk about the DAX. Now the ECB is today. Now the market is sort of speculating how the ECB is going to play it, because following on from Peter Praet's announcement on last week, I think it was Thursday last week, that the ECB would be, or the Governing Council would be, needing to discuss the ending of the asset purchase programme. There has been speculation as to how exactly this is going to play out. Does it happen today? In terms, does it announce today? Does it announce in July? I think there's a pretty much broad-based consensus that the ECB will be ending its asset purchases this year. It won't be cut off all in one go in September, when the current program ends. Current program is 30 billion euros a month. The most likely scenario is that it will be tapered back to zero by December. So probably along the lines of maybe reducing by 10 billion a month back to ending it in December. Or something of that ilk, anyway. Now, the question being, does it announce today or does it announce in July? Now, I mean, it could almost flip a coin, really. I've been reading some suggestions that it could be the fact that they will announce it today, but not have any real detail behind it. and then the details will be thrashed out at the July meeting and then provided in July. That could be the case. I'm sort of more of the opinion that I think they're going to discuss it today. They won't do any formal announcement necessarily today, and I think they will do the formal announcing in July. The reasoning behind that being, I mean, it's more to the fact that they do tend to move in two steps. The ECB, they tend to sort of do a big discussion and then they will act the next month. So they'll do a big discussion today, I think, and then act, I think, in the next meeting. So that's the reason behind that. But the euro is pulling strongly on the back of moves today, and what we have got, if I can get my charts going, is euro dollar back towards this key pivot around 1820 again. Now, this is a pivot that you're going to see across several of the majors. Similar pivot. So we've got 1820 to 1840. Close above 1840, I think you're up and away towards 120 on euro dollar. Cable, 34.50. Pretty much tested that today. It's dropped away. Again, 34.50 to 34.70. 34.70 was this rebound high here. If I can get my crosshair on it, doesn't work, annoyingly. Zoom in, you might be able to get that. 34.50 to 34.70. A closing breakout above that would also mean that cable would be pulling towards 36 to maybe 37 again. What are the other ones? There was another one. Kiwi dollar, which is one I talked about last time, wasn't it? Kiwi dollar. If you see a breakout above 70.60, which was this reaction high here, on a closing basis, then that completes a head and shoulders reversal pattern. And I think this is a pretty good one. And I've still got this potential for a trade on Kiwi dollar, a closing breakout above 70.60. Still looking out for that trade, actually. So a really interesting move there. So all these are dollar-related plays. Let's look at gold. Gold breaking out above 1300. Now, a closing breakout above 1300 is certainly a more positive move. But I think you need to get a confirmation above 1310 because this has been the long-term pivot on gold, dating back for over 2 years, actually. This is the pivot band here. And the amount of times you see key turning points in this pivot area is incredible. So we're now back into this pivot, which is resistance. So you've got to be careful. But the momentum indicators are moving positively. RSI above 50 now. That's highest it's been since April. MACD lines and stochastics also looking decent. So the outlook for gold, amidst a weakening dollar, and I stress that, a weakening dollar. I think gold needs a weakening dollar to really drive a gold recovery. Now, is the dollar going to weaken? Is the question for gold. I looked briefly at it. I think that if we see yields which continue to struggle around 3% on the 10-year, then I think we could see the dollar under pressure. Look at euro dollar. We're starting to see the yield differentials turn around on euro dollar and starting to pull higher. Now that is Bund under treasuries, and that yield spread tightening is a driver of euro dollar higher. Again, that would be dollar coming under pressure. Dollar yen is another one. Dollar yen is conforming once again seemingly to yield differentials. So dollar yen is dollar yen and euro dollar are the two big components of the dollar index. So how the dollar moves on those two are key for how the dollar performs and subsequently how gold performs. So gold continuing to move above 1300 to 1310, I think needs to see dollar continuing to correct. Now I had a question about the indices, because what we have got, there was a chart that I saw yesterday that suggested that the smart money was really selling out of US markets, US indices, and US stocks. And what we have seen is the Dow starting to break its uptrend, starting to roll over. Now, this is an important moment for the Dow. If the Dow starts to come back towards, well, if you've got this fib level, 50% fib, because the 61.8% fib is where the resistance came in place. 50% fib is 24,980, which is basically around this sort of breakout support area. So if it comes back towards 25 figure and finds support and starts to build again, then that looks like it's a decent sort of pullback correction. But you'd need to see that support holding around 25 figure. That's the key. For the DAX, it's interesting that we've got a lot of mixed signals on the DAX, and have done in the last few days, and a couple of weeks really, because as the market has sort of moved sideways between this sort of range between the breakout 12,600, that old neckline of the breakout became supportive, but the resistance is also still really holding above with this old pivot 12,925 area, yeah, 12,950, sort of 12,925 to 12,950. Yesterday's candle was interesting because it sort of moved to the downside initially, but then rebounded. And again today we've seen another move to the downside, which has rebounded. However, if the ECB is perceived to be hawkish today, the euro is going to rally, and I think the DAX is then going to come under pressure. And what we have seen is that European markets, be it the DAX, be it the FTSE, are at the mercy to a degree of their currencies. So the FTSE 100, for example, as you can see here, fell sharply low, about 20 ticks, on the back of strength in sterling this morning, on the back of the retail sales numbers. If you see the euro strengthening, I think we're going to see the DAX lower again. So subsequently, I think we could see this this range continuing if the ECB goes hawkish today, and we could see a move back towards possibly 12,600 in the coming days. So sort of rangy really on the DAX at the moment, but yeah, we've got a bit of a mixed outlook on the DAX. FTSE 100, similar sort of story really, sort of lost momentum in the rally and is subsequently just ranging sideways. So again, if you see sterling breaking out above 34.50, you probably would rather be short on FTSE 100 than long, I would say. That's the inference from those currency moves. Now, Canadian dollar. I've been talking about this underperforming. The trades I've still got on. They've just drifted back a touch, but they're basically still as they were the other day. I put some tighter stops on. You've got the ECB this afternoon, so volatility. I mean, that's a questionable one. I mean, you've broken the uptrend on EuroCAD. I'd still rather be long and in the trade on EuroCAD. However, you could well get some volatility on the ECB this afternoon. So it's perfectly possible I might get closed out of that trade this afternoon. But I'd still, even pushing past the ECB, I'm still sort of in the expectation that I'd rather be long on EuroCAD, because I think euro is going to continue to recover. I like the euro against the Canadian dollar. I also like the euro against the Japanese yen. Euro yen has broken this downtrend, continued to build this uptrend, got momentum indicators which are pushing nicely higher. Very similar chart. I pointed out this on the morning report. Very similar chart with sterling yen, where you've got this broken downtrend, the development of this new uptrend, and it continues to sort of move higher. 147 is the support on sterling yen. If you see sterling yen continue to hold above 147, that's a positive. If you see euro yen continuing to hold above 129, again, that's a positive, I think. So two levels there on those two charts. I've written the possibility for a couple of trades which I haven't actually got on the slide here. Sterling Aussie breaking out. Sterling Aussie breaking out above that 177.20 area today. A closing breakout actually completes a head and shoulders reversal. and you could sort of measure a fairly decent recovery target of 73.90 to 77.20. What's that? 330 pips. So you've got a fairly decent recovery in sterling Aussie if that completes and holds, because you've got these momentum indicators. Look at that. The MACD lines, bear kiss, sort of a bear kiss there, bull cross, turning around. MACD, RSI, nicely above 50 now on that sterling Aussie, and the stochastics growing strongly. So corrections are a chance to buy on sterling Aussie, it would appear. You've got that nice little sort of trend higher starting to form. So you could see a bit of a slip, but I think any correction that starts to build support again, I think is an opportunity on sterling Aussie. Now the other one I wanted to point out is the sort of perpetual range that we've got in the last few months on Aussie yen, but also the pivot at 82.60 actually performed the low almost to the pip last week, and now we're sort of backing away again and sort of moving towards that pivot once more. So watch out for that pivot coming into play. That pivot is bang in the middle pretty much of this 400 pip range. So yeah, this is an interesting just drop away on the Aussie against the yen, but I'm still sort of the expectation that the yen is going to be broadly underperforming. So we've got the Bank of Japan tomorrow. Bank of Japan is not could actually sort of move even perhaps a little bit dovishly if it cuts its inflation forecast. So that could be something to look out for. But yeah, I'm still sort of broadly negative on the yen. The only thing that sort of tends to see yen improving is geopolitical risk factors. So it does complicate things, geopolitical risk again on the yen. So again, lots to go on to today. So yeah, you might have heard earlier on we were on the office we were talking about our West Ham sponsorship. Apparently we've sort of cut that sponsorship now. So yeah, it'll be interesting to see what happens next. Yeah, so fun times, but no more free games at West Ham, unfortunately. So there you go. Okay, so today, watch out for the ECB is the main thing, because this afternoon it's going to cause volatility in markets. Yeah, I wish you good luck. I think again we're going to have two webinars next week. So thanks a lot for coming again today, and I will speak to you then.